The Agribusiness Development Centre has updated its price risk management training to impart Ugandan coffee farmers and exporters with knowledge on how to remain profitable amidst the existing challenges brought about by the COVID-19 pandemic. Now, challenges like elastic price fluctuations and customs delays are the current encounters that Ugandan coffee farmers and exporters are dealing with. Delays of returning cargo trucks from the Democratic Republic of Congo due to the COVID-19 SOPs at the border points is challenging Ugandan coffee exporters who rely on the same trucks to transport their coffee to the port of Mombasa.
Containers are very scarce, the Mombasa trucks are not available, so it takes us a lot of time to ship a consignment from here to the final consumer. It used to take like 1 week coffee to leave Kampala to Mombasa, but now it can take a month.
We rely more on the trucks that have taken goods to Congo, and when they return, they are going back, they pick our coffee. Now, during the COVID, it was difficult to get the trucks to pick the coffee and bring it here. Also, the closure of Rwanda border, that means that all the trucks that were returning from Rwanda were cut off. So it also affected the rate at which we could ship our contracts. But the most controversial part was when they started checking the truck drivers for COVID.
The Agribusiness Development Centre was set up by Rabo Foundation and DFCU Bank to train farmer-based organizations and SMEs in agribusiness.
Because if you ask me, 95 million is
As new challenges in the coffee and cocoa value chains emerge, this price risk management training program is expected to help its beneficiaries remain profitable.
We have also learned other techniques that are required by mostly financiers, because you can't do this trade without borrowing from, mostly we do it from overseas financiers. They are called the offshore funds. And so they have given us tools like we are taught here the typical cash flow pattern you have to produce to the financiers.
I've learned so many things that we have not been using, like how to calculate prices, especially the premiums, and how to determine prices, like if London is high and then the fair trade minimum price is low, that I should go with the highest market.
One of the key lessons that the price risk management training is imparting to its trainees is how to leverage the fair trade standard, which protects the exporters with a minimum price during economic recovery.
We've interacted with 4C, fair trade and the organic market. 4C is a benchmark for the specialty markets, but fair trade is a modified model, because for it has a minimum price and a higher premium. Its standard is also very elaborate and helps us as an organization to run, because it gives us a guidance on how we should govern the association, how we should do our agronomy, how we should take on the social responsibility of the community and the economic aspects of the individual farmers and the association as a whole.
When you look at the pandemic globally and also locally, it has affected the whole value chain. And here we're looking at, we're trying to recheck the whole value chain, right from the producer farmers up to the export level.
Despite the challenges, Uganda's coffee exports grew by 972,962 bags in 2020, a 22% increase from 2019. The increase is the highest since 1991, according to Uganda Coffee Development Authority, and has been attributed to a largely good weather throughout the year. Wadulo Mark Arnold, UBC News.